All right, welcome back to another episode of the Black Bullion Show. With the pound taking such a huge hit last week, towards the end of last week, I figured that its recovery against the dollar would help gold and silver out a bit. Now, today we're seeing the effects of that slight uptick in the pound, buoying gold and silver prices. Now, I'm long gold and silver, but if the pound's uptick is one of the indirect causes of gold's uptick today, it may be fleeting, as traders in the forex markets may have other fish and chips to fry tomorrow. Did you guys across the pond get that one? Thought it was pretty funny. Gonna give myself a pat on the back with that one. But anyway, let's dig into the details of this and see what's going on here. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Let's start here. Gold prices up 1% as dollar weakness buttresses bullion. So let's see what's going on here, guys. Gonna start here. Gold futures on Monday climbed towards their highest finish since the start of the month, as weakness in the dollar and low government bond yields helped to keep the precious metal trading in a range that some market experts see as forming a bullish pattern. Jim Wyckoff, senior analyst at Kitco.com, said that gold may be set to break higher despite gains in equities that have suggested that risk appetite on Wall Street is improving, a scenario that would usually deflate appetite for haven metals like gold. And he says, importantly, recent sideways and choppy price action in gold has produced a bullish coiling pattern on the daily bar chart, suggesting the market is storing up energy for a bigger price move coming soon, possibly this week. And odds favor that price move being on the upside, Wyckoff wrote. Equity markets have drawn some optimism from hope of a ronies shot, a bearish factor for bullion, but anticipation about coming volatility from U.S. presidential election in November also has buttressed gold buying. I'm going to skip this part right here. Prices based on the most active contracts are on track to tally their strongest single session percentage and dollar gain so far this month, and their highest finish since September 1st, according to FactSet data. Meanwhile, December silver, I'm going to skip that. The gains for the precious metal also follow weakness in the US dollar, which was off 1% in Monday dealings, as gauged by the DXY, a measure of the buck against a half dozen currencies. The 10-year note yield was hanging around or below 0.70%. Lower yields for government debt make gold a more compelling option for investors comparing and investing in metals against treasuries, as a weaker dollar can make buck-pegged assets more attractive to overseas buyers. On a more cautious note, Craig Earlham, senior market analyst at Owanda, in a Monday note said that although he believes the long-term bullish case for gold remains intact, there is a possibility of a corrective move for gold. And he says, this temporary setback for the dollar, a reprieve for gold, may not last though, with a corrective move in both cases still looking plausible in the near future, Earlham said. So here we were presented with both sides of the gold and silver coin, so to speak. One being bullish and one being bearish off of this consolidation pattern that we're currently in. And as far as the extreme upswing or downswing that will happen after the consolidation, I'm thinking that we'll see an upswing, but the price action in gold does give me a little bit of pause. Now, as far as the dollar's actions today, I do agree with Craig Earlham that it is only temporary. Why? Well, because of this. So the pound has steadily been climbing back from the 1.28 depths or ashes back into 1.29 against the dollar. And the pound has been gaining steam, but why? Pound's Brexit sell-off pauses ahead of internal market bill vote. So let's see what's going on with this. Sterling found itself the center of attention from a currency market perspective last week, said John Fahey, a senior economist with AIB. It suffered amid increasing concerns over the risk that the UK and EU will not be able to agree a trade deal before the end of this year when the transition period ends. Such a scenario would mean a move to WTO rules, resulting in another severe blow to the UK economy. This would come on the back of an unexpected 10% fall in GDP this year. Trade talks stalled last week after the UK published details of its internal market bill, which would renege on key parts of the withdrawal agreement signed with the EU last year. The bill would override the Northern Ireland Protocol, which requires the island of Ireland to follow EU standards in a no-deal Brexit scenario. The government argues the internal market bill will prevent a border between parts of the UK, an outcome it said would threaten the Good Friday Agreement peace process. Ministers also argue food supply to Northern Ireland could be threatened under the withdrawal agreement protocol. Critics say the internal market bill itself threatens the Good Friday Agreement and will seriously damage Britain's standing on the world stage, as the bill's passing would mean Britain was breaking international law. So I'm actually going to stop right there with this quote. So we'll see how the pound progresses against this news across the pond. It does look pretty monumentous, but I more so for long-term consequences. But as far as currency markets are concerned, who knows? Like I said, there could be other fish and chips for forex traders to fry by tomorrow. But just as the pound was trending up, the DXY has been trending down, and it's not just the pound that's been giving the dollar some trouble. We're also finding some strength here in the euro. The euro has been climbing back into 1.19 territory against the dollar. According to some, the uptick in the euro comes from the optimism on Oxford University and AstraZeneca restarting their ronies shots trials. Now, this comes just after they had to put a pause on things because some trial participants actually grew ill after being involved in these trials. I'm going to stop it right there because we're on YouTube. But because of the restart in trials, there's speculation that safe haven currencies aren't in demand as much as riskier currencies. So because of that, you will find, or we find the euro climbing up a bit. So finally, let's have a look at gold and silver and see how they've been reacting today. So in general, we see that gold and silver have really begun to take off today after all of that news in the currency markets. Gold is up by 0.75%. Last time I saw it was actually up by 1%, as the article at the top of the video was showing. Silver is up 1.52%. Of course, it was up higher. As you see, the peak was right around that 12 o'clock Eastern Standard Time. But it's above $27, which is fantastic. And again, we see gold above 1950s. It got above 1960, which was also really good to see there. So things are looking really good today. But again, we'll see how things progress because of the pound's movement today. And with the internal market bill and the voting that will happen there, we'll see how the pound reacts to that. Now, depending on what happens there, this could keep gold and silver prices elevated, or it could bring them down indirectly by their relation with the dollar and the dollar's relation to gold and silver. Now, yes, the 10-year Treasury note, those yields are somewhat muted right now. But until they go down a little bit more, then I would like to see some silver and gold prices elevating on the back of that. So everyone, thanks for watching. Hit that like and subscribe button. It's Black Bullion.